What's up, guys? Welcome to my podcast. We got Kevin here, my boy, my producer. What's going on?
Not much. Just
How's
here another
everything?
week.
I know, right? It's been one of those weeks. Like, you just like, crap. You know, is this ever going to end? Like, it's just one thing after the other, right?
It'll end eventually.
I know.
Yeah.
No, well, you want it to end on a good way, too.
It'll
know?
end in a good way, yeah. I don't even think we mentioned last time that we're in a new.
Yeah, we're at a new space, guys.
Still trying to figure out exactly what space in the new space.
Yeah, right? Yeah. So welcome to our new spot. Kevin and I will be talking much more about like home loans and what situations are going on in today's market and a lot more information. So today I want to talk about premarital assets, right? A lot of people, they say, oh, we want to get married and we want to buy a house, So 9 out of 10 times I always tell my clients, I was like, before you get married, each of you buy a house, So a lot of the times where I get questions where it's like, some clients, they say, well, I want to purchase a home. I currently have a home and but my wife or my husband is not on this mortgage, And a lot of them fail to realize that sometimes if you are married, you both are entitled to that property on the deed. So in Florida, there is marital rights and then there's premarital rights, And if you are married and you currently purchase a home, the wife or the spouse or whatever the case may be is entitled to that property. So you can't come here and say, well, my first mortgage is under an FHA, but my wife's not on it, but then I want to purchase another one under my wife's name because she's not on the first. No, that's not how it works, right? On the deed, when you're both married, you are both entitled to that same property. So before anybody gets married, each of you buy a home, Yeah. FHA can be used once every 7 to 10 years. So let's say, for example, you and Rachel decide to get married. I would say, Kevin, go buy a house now. And Rachel, go buy a house now before you get married, right?
Yeah.
And like this, you have a property like this. She has a property. And then later in the future, you both can go ahead and purchase another property, right? Together, right? So then that has 3 properties now, And definitely FHA, whether it's FHA or conventional or whatever the case may be, purchasing a home as a primary status before marriage is great. That is a huge benefit other than getting married and then going to buy a house,
Right.
So a lot of people say, well, that doesn't make sense, or, we want to eventually move into something together. Yeah, that's fine. You have your house, she has her house, and then together you guys can buy something else, something bigger. You have kids, whatever the case may be. And then also too, keep in mind that if your income doesn't qualify for you to purchase your bigger home once you both are married, you can rent out the other 2 properties and use that as income.
Right. Yeah.
To qualify for the bigger home. So it's super important to always, before going to the courthouse, whatever the case is, purchase a home. I'm sure you hear that a lot too, where it's like, oh yeah, we're going to get married, but my wife doesn't have a house under her name and we're going to purchase one. That's not the case. The wife always has marital assets. Even if they're on the loan, or the spouse or whatever the case may be, even if they're on the loan or they're not on the loan, they always have rights to that property.
Because you're married.
Because you're married. Yeah.
Okay. And is that just a Florida thing? Or is that...
Well, in some states there may be, but in Florida, I do know for sure that is a case. Yes, it is super protective of marital rights, they say, quote unquote. But why a spouse always has rights to the primary home.
Okay.
Yeah.
So if you're married, regardless of if one person is on the loan or both are on the loan, you're both entitled to the property.
Correct. Because your deed is always going to read, Kevin married to Rachel, so-and-so, spouse of Rachel. So your deed is always going to be written like that.
Got it.
Then other than before marriage, it's going to just say Kevin and then your last name, single man, and then Rachel, single woman. It's like this, you both have a property on your own. Now, you want to do this typically a year before you decide to get married, because you can have a primary home, and an FHA guideline is you have to at least live there for about a year before you purchase another primary home. So like this, you have a property, she has a property, and then you both rent out those two properties and go purchase yourselves a nice bigger home, you know? Right. So that's super important. And just because one person's on the loan on the current home doesn't mean that, oh yeah, I'm going to utilize the FHA lower down payment. Mm-hmm. And the benefit why a lot of primary status homes, whether it's FHA or conventional, is the lower down payment.
Right.
Okay.
Yeah.
And it's factored into your debt to income ratio differently and things like that, you know. Mm-hmm. And then a lot of people say, well, we're not going to qualify based unless one of us is on the loan together. Where there's a will, there's a way. Trust me, there's a lot of loan products out there that you can qualify for, you know.
So for some people who might not want to go that route of buying before they get married because they feel like maybe they won't qualify for a loan.
Yeah.
Just, you know, there's other loan products out there that you can try to utilize, or grants, right, or things like that.
Yeah. That
would be beneficial to them to be able to purchase a home without having someone co-sign.
Yeah, like we were talking earlier, you know, as a self-employed buyer, right? You would come and say, well, Sonny, I don't qualify on my own. I need Rachel on the loan. Well, wait a second. How do you get paid, right? Now, if you get paid 1099, there's a lot of loan products that have come out so that you can utilize it. So, for example, a lot of people file something called the Schedule C, and a Schedule C is you receive a 1099 and you have a 1099 that's 100,000, but after all your losses, you come home with 50,000, right? There's a new loan program that states we can only use your 1099s. We don't have to use the tax returns. And that also is it is a non-standard loan product. It is not a conventional or FHA. So any rules to FHA or conventional may not apply to this loan product, but it is out there, you know? So,
yeah,
you know, you can come and tell me, well, Sonny, I want to buy a house before I get married, but I don't qualify on my own. Well, wait a second. Let's see. Do you have a 1099? How much do you claim? And that loan product requires a 5% down payment. Still better than putting a higher down payment of 20% or 15 or 10.
Yeah, definitely.
So definitely utilize that.
So what loan products would you say are the best for people who aren't married yet? Maybe people who are looking to buy a home before marriage.
So definitely FHA. FHA right now is going really well. You want to utilize the FHA. Within a year or two, if you have to get your ducks in a row, definitely look into getting pre-approved or speaking to your loan officer or your mortgage broker and see where you stand, right? FHA right now, utilize it to the best of your ability. And then there's always conventional. And then there's a non-QM loan product. That's where the 1099s fall into place, or bank statement only loan products, or other type of loan products. But that's a whole different type of conversation, you know? But definitely FHA right now has gotten extremely better. So you want to utilize the FHA to the best of your ability. And it's only 3.5% down payment, you know?
Gotcha. And so the other one you're saying is 5%?
Yes.
1099?
Yes. 1099, 5%.
It's not a huge difference.
No. So you have 2.5% difference. But about, depending on the purchase price, $6,000 to $7,000 difference, you know?
Right.
So definitely. And check this out. So I have to talk about this because this was like, I have to pat myself on the back. I have a client. She was purchasing a home, didn't qualify on her own. Well, you know, I pre-qualified her about a year ago. She needed to work on some stuff. A year later now, today, she calls me and she's like, I'm ready to buy a home. I said, okay, cool. Well, long story short, her grandmother was co-signing for her. Okay. Mm-hmm. It just helped a little bit more. But unfortunately, with all that stuff,
there's a fly.
all that stuff going on, her grandmother passes away.
Oh, wow.
In the middle of the loan transaction, right?
Wow.
So she's in a rut, sorry for your loss. Now the sellers are just like, oh, they're buying another house. So they're like, what's going on? What do we do?
Yeah.
And now she doesn't have enough money to come up for closing costs, right? Sellers were very, very nice enough to give her a seller's credit.
Okay.
Finally, all said and done, I just this morning got a clear to close for her. And she did not give up. Neither did I. Had it been any other lender, they would have just said, denial, sorry, loan can't work, right? I had to restructure the loan, put everything into place, make it work. She is walking out with only paying $2,586.
Wow.
After all the seller's credits.
Wow. That's awesome.
Yeah. The house has a pool, 3-bedroom, beautiful.
Nice.
It's in Orlando though. But she's only walking out with paying $2,585, $86 on a closing transaction.
Yeah.
So where there's a will, there's a way.
Yeah.
Now, 6 months later, her boyfriend or whatever the case is, he's going to purchase something. And then together, whatever they want to do with it, they go ahead and sing Kumbaya and that's it,
Yeah.
Yeah. So there are so many opportunities right now. You just cannot give up. You got to find your way. It'll come. It was just meant to be,
So there was this show, I can't remember the name of it right now. But basically the premise of the show was it was a reality show, and they would take two couples who were engaged, and they would have a wedding planner and a realtor.
Oh, that was on Netflix, wasn't it? I think it was on Netflix. Yeah,
so.
Marriage or Home or something like that.
Yeah, something like that.
Yeah.
It was like marriage or mortgage, I think.
Right.
Marriage or mortgage, I think
Okay.
it was called. And so they would show them. They would have like a realtor show them like their houses. They would tell them like what they're looking for. So realtor would show them like 3 houses, and then the marriage planner would show up like three or would plan a wedding for them.
Yeah.
And then at the end they would have to choose if they want the home or
a mortgage.
Mortgage or a wedding.
Well, what was the majority of them that picked? I didn't watch that show. Sorry.
I don't remember. But I
hope they picked mortgage.
That's I think I would probably take the home.
Yeah, right? Well, think about it, because once you're married, that's it. Everything from then on there is combined. That's it, right? There is no premarital assets. Yes, marriage is a beautiful thing. I love it. Yes, I know. But you gotta have your assets, right? So like this, you both can combine that income and become bigger and better, right? You purchase a home, she purchases a home, and then you guys get married and then purchase a bigger home, So definitely it's super important to have your assets. Real estate is where it goes. And I was reading an article, and I think I posted a video about it, that right now, actually, Florida is going to appreciate 14% within the next year. So, and forbearance programs for people who thought that, the market's going to crash. I'm going to wait till the rates get lower, or the house are going to drop. It's not. We have a shortage of homes, of 6.3 million homes in United States. So inventory is still low. And the people who were on that COVID relief program, now they've extended the forbearance plan so that people don't occur foreclosure, or that they don't fall into that same market crash that they did back in 07, 08.
Right.
So there is not many homes out there, but have an open mind, get into something if you can now, get yourself a property. Anybody that's single right now, go ahead, take care of it, purchase something now. Don't go out there and party or whatever, because there's really nothing out there. But invest, definitely invest.
Yeah. No, yeah. If there's one thing, like going back when I was working and going to school, I would definitely save a lot more money.
I know, right? You think about it, you're like, you get a job and you're like, man, I'm banking. Like, I got this hourly wage. And like back then it was like,
Yeah.
what, $10 an hour? Well,
Yeah, it's
my
funny
back
because the
days.
last job, like the last 9 to 5 I worked, was with, there was a lot of like 21, 22-year-olds, and they would, go spend their money. There was a store downstairs that sold like high-end clothing. They'd go spend like thousands of dollars, and I'm just like, you kids are like,
Yeah,
so.
yeah.
And then I think about it, I'm like, that was me.
Yeah, I know, right? Like, oh, I got paid. Like, oh, what was my side? Like, Express. I'm going to the mall just to hang out at the Grove and do loser laps, But we've all done there, and then we can only tell our kids and how to go ahead. We learned our lesson. So the biggest thing that I remember my dad did for me was, when I turned 16, it wasn't a car. It wasn't this. It was a first home, right? My college, going back to our conversations when we had about college, right? It wasn't they're paying for my dorm or whatever the case is. For my brother, they bought him a home,
Yeah.
So those are and then whatever they decide to do with it whenever they have kids, that's on them. But at least they have something before they get married, right? And then they can always build and expand with their spouse from then on there, So it's definitely, and guidelines, they're very restricted right now. But at the same time, you can utilize these loan programs because you guys fall in that category. Primary home, live in it for a year later, you guys get married, go purchase yourself another home.
Yeah.
Combined income. Yeah. You can use that money from the rental to go ahead and buy the other one. So, yeah, it's super important.
Yeah, definitely.
Make sure you do that before. You guys can't see her, but she's behind the camera. Yeah, but yeah, definitely take advantage of that. Any other things?
I think we're good for this.
Yeah.
Topic.
So I definitely wanted to talk about that. There are a lot of things I'm trying to get out there more into the community to go ahead and provide this type of education. I can't always be on the phone with everybody and like, hey, this and that. So definitely, if you have more questions, send me a DM, give me a call. I'll be more than happy to go ahead and answer them for you. Kevin, thank you for, as always, as being my support system.
Of course. Thank you.
And thank you to my team. Don't forget to subscribe to my YouTube channel. My link is on my bio. And if you have any questions, feel free to reach out. Have a good one.